Hello, I'm Luca De Giglio, and this is the Web3 in Travel podcast, where you can learn about crypto, blockchain, and how the new internet will change travel.
So this is an interview I've done with Pablo from the Camino Blockchain on Chain4Travel, the company. And I wanted to do this because I needed to get a little bit updated on what's going on in general with the Web3 and travel industry. I haven't followed as I used to because I've been sucked into the AI world. So much to do there. But then things started happening in the travel industry. Actually, no, they started happening in the stablecoin world, and they're gonna affect the travel industry very much, in my opinion. So he gave me a little bit of an update. We ended up talking more about stablecoins, maybe because that's what is attracting my attention at the moment. I think this may be the moment in which the travel industry finally starts using crypto in very, very meaningful ways. We're not there yet, but we're going to be there pretty soon. Just one thing, Stripe acquired Bridge, which is a cryptocurrency company, a stablecoin company, for $1.1 billion. And this is the biggest Stripe acquisition ever and the biggest crypto acquisition ever. Stripe is really, really serious about stablecoins. They have lots of products, a lot of services around that. So it was great, and I hope you're going to enjoy it. I think this is the moment in which you have to decide whether to move onto crypto in general. I would say maybe you don't want to use the word crypto, use stablecoin, but to move there, especially if your company has lots of payment and international payments. And there's the interview. I started recording a little bit later by mistake, so you're going to jump into the conversation as it just started, but everything you need is there, so I really hope you enjoy. Bye.
Right.
Back. Yeah.
And definitely, coming back to your question, what we see is a lot of adoption happening. Not super fast, it takes time, but it's moving. So to give you a quick update, we founded the company in December 21. We started building the blockchain in December 2022. So the first year was basically all about the technology. And most probably there we made a little bit the error that we only talked about the technology, how cool blockchain is, how cool wallets are, how this is going to transform the industry, because blockchain is the only technology that can do transactions and payments in one, and so on and so on. But it was cumbersome for a lot of companies to understand that. Also, we have to see it a little bit in the bigger context. Most of the companies just came out of Corona. So they were trying to catch up with business, and their roadmaps, they paused during Corona. So there was still a lot of things to do. So catching business on the one hand side, finishing the projects that started pre-Corona, and then new things came in, right? And then we started building that. The second year was the first use cases we saw. I mean, one of the reasons why we started this project, and we were not the inventor of travel and blockchain. There were many good projects out there. Some of them are no longer with us. Some of them are still succeeding. But what we saw is that most of them were building on random blockchains. They selected based on their needs or the grants they received. And we said, hey, if we fast forward this 10 years in future, then we will be in the same mess like we are today. Everybody building on different platforms. We need APIs, bridges in the Web3 world to connect all that stuff. And we won't have full power of it. It gets more and more complex. And I mean, this complexity is something that travel kills today in a lot of areas, be it API, data which is not shared, bookings that cannot be automatically modified because the booking data is shared across systems with no access after the booking, and so on. So we said, why not create a blockchain for the travel industry? Travel is the second largest industry worldwide. It has a lot of different verticals, so a lot of things is travel, not only the classical, let's book a full ride, let's book a hotel, but it goes also into sustainability, loyalty, data sharing, and so on. So why not build a blockchain for the travel industry? So the second year, that was then 23, We saw a little bit adoption. So the first use cases like Sleep.io, competitor of Traveler, went live. And step by step, actually, people started seeing things. It's always very, very hard if you try to change or innovate an industry if you're talking only about the back end or the database layer. So because it's not so tangible, right? And a lot of decision makers, they need to see things. So what can I do with that technology? So last year and this year, it got easier also when we approach companies, because suddenly, if you are in the loyalty space, we have X companies doing loyalty. All of them a little bit with different flavors, but it boils down. You have a digital wallet, you have some kind of digital token which can be exchanged, interacted with, or even earned if you do certain actions, all this Web3 technology. So I think to answer your question in a nutshell, what we see is an acceleration. And funny enough, not necessarily what we thought at the beginning because everybody loves blockchain, but more because now AI is coming as well into the picture. So we have actually not pivoted versus AI, but we also have embedded now AI into the way we talk with companies. And something what we have learned as well, it's in the first touch points with companies, don't talk too much about the technology and blockchain. Talk more about the pain points and what the technology can do for them, how to solve things, right? I mean, if in our industry you talk about blockchain, it's like if you talk about the Ferrari car only on the engine side, and you're not really discussing what can this car do with me, where can it bring me, and how fast can I get there. So I would say overall, it's progressing. I mean, we launched the blockchain now 2.5 years ago. We are approaching now 6 million transactions on the mainnet. Those are all real world transactions. So exactly this kind of projects that a lot of blockchains are hunting for, because we don't have any NFT trading, exchanges, DEXs on our chain. But yeah, overall, it's still a lot of educational needed for the industry.
Okay, I was checking the Caminoscan .com is where we see transactions, right?
Exactly.
You may not see this, but people who watch the video will probably see it later. Give me a second. I wanted to go to see the browser. Still trying to see. No, I can't. I'm gonna have to do it later. Yeah, I see daily transaction about 20,000 transactions in one day. That's a lot. What are the biggest use cases? Who's consuming all these transactions mostly?
So I would say 20% are tickets and booking transactions generated by Visitor app and the likes and Sleep.io. Then we have a few new payment use cases like Bakun, who is using the blockchain to register transactions between companies or as entities cross-border across the world in different kind of regions. And I would say 20% is NFT ticketing, bookings, then 45% most probably is payment, and the other 40% is different kind of use cases. So using the blockchain only for certain tokens. We also have now Token Marketplace, a new project which is launching, which is focused on travel agencies, funny enough. So using like a kind of digital voucher marketplace for travel agencies, so they are able to compete with OTAs. We have systems, oracles providing data or using the blockchain just as a decentralized immutable ledger so that different parties can access and see data, but without the possibility of modifying it. And yeah, so I would say that those are the main areas at the moment which are used. Also sustainability. We have a few projects like Bogovi working on sustainability. And in general, actually, the most, I would say, hot topics in our Camino ecosystem at the moment is payment. Payment definitely now, what you and us are advocating since actually early days of Web3 and travel, actually that blockchain technology can do transactions and payments, be it with cryptocurrency, with stablecoins or CBDC. This, the companies we work with are reading on a daily matter left and right? Suddenly the big payment players like Visa, MasterCard, Google, they're launching their own payment blockchains, they're launching agentic payment, they're launching digital wallets. So it is a topic which has gained, I would say, recognition and traction outside of what we do on our daily basis, but it feeds exactly into what we try to explain to the travel companies. And we have one very nice project at the moment ongoing between MTS and Monerium, which they use the blockchain actually for intra-company payments. So if you are an international payment, international setup company with different local entities, MTS is active in 66 markets, they have the challenge that they receive money in a central at the headquarters, and they have to distribute that money. And sending money to exotic places through banks does not only occur in high cost and FX exchange, but also it takes time. So these guys have created a project where they can now prove that they can send money almost instant, within 4 seconds. It's there at zero fraction or almost at zero cost, and it reduces drastically the workloads they had manually in the finance department. So I think this kind of the use case, it becomes more tangible as well for decision makers, because they see, oh, it's automatization, it's transparent, it's secure, it's cost savings at various points, be it internal stuff, but also transaction costs. And I think that is gaining more and more of traction. The other area, apart from payments, which is currently a hot topic, is identity. In the Web3 space, we've always talked about decentralized identity, zero-proof identity, and so on. Those are the lesser ones which are currently targeting or impacting our industry. Some of them are using that. But what's definitely making big strides is, for instance, the new EU ID wallet, right? The new European Union has the idea that by 2030, 80% of the citizens of the EU will have an identity wallet. Even Switzerland just voted for a new eID. And how to connect now these wallets, which are on the client phones, with platforms, and how this. So that's why we're also part there of the UID Wallet Consortium with some of our partners in the ecosystem to start now working on the large rollout the European Union is forcing, and just kicked off actually this October in Paris.
Lots of stuff. So you're saying the hot topic is payments, right?
Yeah.
Maybe we can go a bit deeper into this, because I have to be honest. Maybe a year ago or a bit more, one of my episodes in the podcast was about payments, and I said payments is the least interesting application of blockchains in travel, and I completely changed my mind according to what happened in the last year. I've seen that video of MTM, right? That's the company. MTS. Sorry, they were at the Chain4Travel conference in Crete, I think. Very interesting. But I've been very impressed. Okay, let me take it from behind. So, I've been talking about this intersection of Web2 and travel for a long time. As you were saying, we were talking about the engine. So we were not talking about what the car can do, but we were showing how beautiful the engine is. And it does make sense, because when you invent, the engine is the technology which makes the car possible. So that's what you talk about at the beginning. But many people see the engine and they don't understand why it is better than horses, right? Now we are at the phase in which we can show the car and the car is moving faster than a horse. Roads are still muddy, so sometimes the horse is still better.
Yeah.
But we're getting there, right? And what I've seen in the last couple of weeks, I would say, I took the time to really, update myself a little bit on the situation, is that payments are killing it, not in travel, but as for adoption of crypto in the real world. And the big news, in my opinion, is being Stripe acquiring Bridge for $1.1 billion, so $1.1 billion, which is the biggest Stripe acquisition so far and the biggest crypto acquisition so far. So I went down this rabbit hole a little bit. That's why also I've seen that video of MTS. And now I'm convinced that actually payments are the killer app. We were waiting for crypto to finally make, impact in the travel industry. Let's go, for the benefit of the listeners. Let's see again, why is this advantages? So you said because it's fast. Let's see one by one, please. So it's faster. So crypto payments. So first of all, sorry, it's not something we have to, force users to learn. We don't have to force travelers to use stablecoins. It's only the back end, first of all, right?
Well, I think it's
Mostly.
both. It always depends how it's embedded in the usability and the user experience of the client, right? I mean, if you talk about the typical crypto user with his wallet, with the mask, with stablecoin, he can go on Travala or Sleep.io, connect his wallet, pay with stablecoin. But nevertheless, there's a lot of friction. So my mother would not never have a MetaMask, right? That's why we have been also
Yeah.
focusing a little bit on payment rails which allow traditional travel companies who use, for instance, SAP, to use that technology without changing, having the need of having an own MetaMask wallet, having their keys somewhere in a company safe, and so on. But yes, you're absolutely right. I think there are a lot of new payment rails being built, embedded, and that's the big difference, I would say, since the last 3 years, that it's not a separate rail anymore. It's connected to the traditional rail. So, I mean, when we talk about blockchain payments, what we see, we see actually three different types of using blockchain for payments. One is classical crypto. Somebody has USDT and he transfers from wallet A to wallet B or supplier A to supplier B in USDT or any other stable coin, right? That's kind of straightforward. What we see there is suddenly companies like SAP integrating blockchains to allow financial teams which are using S4HANA Digital Currency Hub, for instance, application which most of the airlines use and also most of the tour operators, to send money. So that's the big thing. So we suddenly don't talk about bridges and wallets. It's just embedded in their financial infrastructure. Same thing happening with banks, right? Banks suddenly are doing launching own blockchains, own consortium. ING just came out. They are launching now a banking consortium, European banking consortium with 30 banks. We see in the US banks playing around with payment rails. So there's a lot of interest going on there. The reason why this is so relevant for us in the travel industry is the margins overall in travel are quite low. On the other hand, we have, depending on the country you're in, depending on the credit cards and intermediate bank sales, you have 3 to 5% payment costs.
That's
I mean,
huge.
the app, it's
Crazy.
incredible. And if you factor in 24 billions of fraud every year, which is still happening with credit cards, although it got more secure and so on, but still, I mean, my credit card got blocked this week because I had a fraudulent transaction from Brazil on it. I've not been in Brazil since a year. So how does this happen? So it's still, I think it's security on the one hand side, but more as well the cost of the transaction itself. I mean, all the big players, be it Visa, MasterCard, they started 2 years ago to patent digital wallets themselves. But of course, I mean, they are not going to cannibalize their own cash cows at the moment. They are waiting for the right moment. So they are doing partnerships. They're providing now these rails as well in collaboration with different kind of partners, like for instance, Stripe, which is one of the largest e-commerce checkout providers there is, right? And what does it mean for, also on the one side, we have the benefits for travel companies. It's cheaper, it's faster, near instant, I would say. And also, you have actually the benefit of a transparent ledger, right? You have every transaction is recorded, so you see that. And what more and more companies are now also seeing is that using blockchain rails also allows to program money. So that's the next step we are
let
going
me
to see.
let me interrupt a moment, because it's like we are throwing in a few seconds, decades worth of technology which can be used in a sense, like each one of these is that important that it really deserves a bit more in depth. So first of all, cost for payments, right? You're saying that sending money in the travel industry costs to 2-3%. We're talking
Yes,
about an industry where the margins are 5%.
below. No, no, even below. So an
Below.
average airline is somewhere below 1%. I
Airlines are very
mean,
low. Yeah, yeah. But let's
there
say one
are,
percent to how much are hotels margins?
depends what kind of category you are and how you work, but I would guess a little bit more.
Two
But I
percent.
know tour operators who are below 1%.
So we're saying that they making 1%. They're making 100 million a year and they're spending 300 million in payments. So we're talking about something which can theoretically double or triple the margins, Of course,
Yeah,
that's
and
not
your
how the
EBITDA.
market works, but yeah,
Yeah, absolutely. And
it's
now imagine you are a public listed company. What duplicating your
right.
EBITDA will make from an investor's point perspective,
So
right?
this is, in a way, is an opportunity to increase your margins by X. It's not like increase the margins by 5%. It's by 100%, 200%.
Yeah,
So
absolutely.
that's not huge. This is enormous, and
Yeah,
so that's just this one will be enough good reason to say, okay, why don't we try to go that way, right?
yeah.
Good. So this is one thing. Then the other thing is the speed. Tell me about the
Mhm.
speed. So companies send money, receive money, and there's always these 3-5 days delays with the banks, etc. And this goes from days to seconds.
Exactly. So it always, of course, depends where do you send money from. If you are in the same country, so usually it's ideally the same day, most probably the next day there, but you have a few hours delay till you see it. If you're sending it through Europe, through Swift bank network, usually it's also 1 to 2 days, depending on the bank. If there is an error, you only see it after 2 days.
Can
The
I
money is
interrupt you
returned.
here because I'm not very well versed in payments? What about instant SEPA? This is not a thing yet for company to company transfers.
Sometimes, yes, it really depends. I mean, there are, especially in the international money transfer, I mean, there are bank networks like SEPA or SWIFT where you can send money quite quickly, but it's a 24-hour delay. What we are talking is 4 seconds.
But when I use as a Revolut to send to some other place, not Revolut,
Yeah.
Revolut to some other bank, sometimes I see instant payments as a private person. That's not happening in the
Yes,
corporate world.
sometimes if they use this
Oh,
kind of Revolut charges as well, there are a lot of different payment
okay.
rails, right?
So that's
But
like generally
overall, I would,
is not that fast. Okay.
no, it's not that fast. I would
Okay.
always say it's at least one day.
So what
Right? And
happens? What is the advantage for companies to go from days to seconds? What changes for them?
so I think for it always depends who needs the cash flow. Of course, the sender has the money gone instantly, but that's also happening the moment he sends the money. But what's more important is actually on the receiving end that you are able to send money directly. And this is not only for suppliers important, but maybe you also have employees in that area, right? Sending money to Afghanistan, sending money to Uzbekistan or to quite exotic countries that can take days. And sometimes even the transfers are blocked, right?
Okay.
So that's why going through blockchain rails, it's instant, it's transparent, everybody sees that the money is there. And also what you have to see, I mean, in our industry, we still work a lot with prepayments, right? So money is being sent for something which is used 9 months later. And there are also now a lot of companies exploring the ideas of smart contracts and escrow accounts so that they can send money, but the money is not gone completely. It's locked in an escrow account. It's only released if some things happen. I mean, think
Like a
back to
third
Corona.
party basically, but it's a
Exactly.
contract. Okay.
Yeah, exactly.
Okay. About this, there's another aspect which we haven't touched is the potential for yield. So let me explain to the listeners what happens with say USDT. So USDT gives you USDT, let's say 1,000 USDT, and they keep a reserve of $1,000. And they keep this reserve in many ways, but mostly in treasuries, American treasuries, and they earn money on that. They earn 4%, 5%, whatever it is, right? And they keep it. So today, Tether, which is the biggest stablecoin, bigger than USDC too, is I think that they are more profitable than
Apple.
Apple,
If you break it down per
right?
employee, it's more valuable and profitable than
And
Apple.
they are, I think, the fifth or the seventh, I didn't check, buyer of American debt. So
Yeah,
they are huge,
exactly.
okay?
Yeah, I mean, basically what they do is if you buy 100 USDT, they receive money, free money from you.
Yeah,
They invert that, though they tokenize that in USDT, right? And the money they receive from you, they buy bonds from the Americans, which usually gives you 3 to 5% yield.
okay.
So that's the
And they make
interest rate.
lots of money. Now, this
I
money
mean,
could come back to the users with other ways, and we're going to touch on this a bit later. But if you get USDT or USDC as a payment and don't convert them immediately into fiat, you can do something with it and earn some yield, right?
yes, I mean, there are, of course, I mean, this is similar to what a lot of traditional finance departments do today in the treasury department, they sit on a lot of cash at the end. Now it's digital cash. And depending if you need the money now or not, you're not sitting the money just in the bank. So you're working with that. You're giving loans, or you're investing in some short-term funds, or you take some kind of yield with that. Yeah, that's nothing new. I would just say the mechanism and the type of where to put the money in are now expanding thanks to Web3, ETFs, yield tools,
Does
and
it
so on.
open the fact that the stablecoins are much faster and programmable? Does it make the potential for yield bigger? Meaning, I could get, you know, I can get this USDC or whatever stablecoin I put on a contract on Aave, for instance. I can get it back in seconds, and I can make this automatic. So maybe the pool of money which I keep idle goes to zero basically, because I can move it very quickly in and out of these pools. Is this something interesting for companies?
I would guess so. I mean, at the end, I mean, it's also a risk associated with that. With any kind of financial transaction, you need people who know what they do. But I definitely see that there is a lot of interest in stablecoin, and there is also additional earning potential. There are even stable coins, not USDC or USDT, who part of that yield give back to the holders.
Exactly.
So there are a few out
Yeah.
there who actually now, as a business model, say, "Hey, I'm getting free money. I'm getting 3-5% interest rate. So in order to boost my coin, I give 1% back to the others
Yep.
or to the holders, right?" So that's of course also interesting, and I think there will be a lot of things. But yes, the speed, how you can move money, invest money, take out money if it's not locked or vested or whatever, it's definitely superior to the traditional finance tools. But so is also the volatility. That's also something which happens, right?
What
That's also,
volatility?
I mean, in the blockchain space, not talking about stablecoins. Stablecoins should not be volatile, although there have been a few errors as well. Like we just saw recently this week that one stablecoin was not put in the right data through an oracle. So the oracle was
XUSD, I
faulty.
think, through.
I don't remember. I just read it through, but I
Okay.
saw that, and it's such apparently the same hacker exploited it twice by
Right.
basically posting a collateral which was worth almost nothing,
Mm-hmm.
but according to the Oracle data,
The
it was
chain
worth a
link
lot.
was the culprit there.
Yeah,
Yes, yes.
exactly. So the Oracle provided the data. Somebody saw that and exploited it for the second time.
Mm-hmm.
So I would say definitely very interested for the travel space. Be very careful what you do with, as usual, with financial transactions. But the more the space matures, I think the more of this kind of yield revenue tools you were hinting to can be on both parties, right? And can definitely benefit.
So we're talking about the 4% from, let's say, more or less 4% from treasuries plus about 3-4% from DeFi. We're talking about 8% here. That sounds too good to be true, but that these are the numbers.
I mean, it depends what kind of payment transactions you have as a company, how much goes through credit cards. So I mean, there are credit cards that charge up to 5%, if depending on the loyalty scheme and how exclusive they are. And you factor in their FX rates as well, because usually customers or companies play in one currency, and it's also translated to the other currency then,
Yep.
which
So
usually
these
also
are the
has a
costs,
margin.
right? But I was referring to the potential for earning, which is there's the yields from the treasury, which is 4%. Maybe you get two because the stablecoin issuer keeps two. Then you can get four more on Aave. You get 6%.
If you then want to reinvest that into other treasury possibilities, yes, you could do, of course, more. Yeah.
All right. Okay, now a question which I've been studying this for a while these days, and one big question which remains, and I have partial answer here. You mentioned transparency, right? So you don't need companies won't need to reconciliate that much anymore because everything is already written down on the blockchain, right? You know where the money is, you know it instantly. Now, the thing is, companies need privacy. They don't want their transactions to be seen by everybody. How is this solved in general in this space?
I mean, you solve it, of course, through hashes, right? I mean, you put some kind of, I mean, what most of the companies do is they have a booking. And this is also usually what happens today in the travel space. You have a somewhere a booking system and a separate payment system, right? And then the financial system reconciliates both. They attach the booking to the system, or the mid office system does this. Now companies are putting the hash data of a booking on the blockchain and reference it to the payment associated to that. So then they have both, actually, the payment transaction and the booking transaction on the blockchain in a way that nobody sees what's behind that. They may see, okay, wallet
They
pay.
cannot infer they are connected by the timing and the value or
Well,
something. No?
sometimes they can, but they don't see for what it was. They only
Okay.
see, and you can, of course, also even further opaque it by doing bulk payments, right? So by basically combining, similar to layer twos, what they do, you
Yeah.
take a bunch of transactions, put it together, and then send
Yeah,
one
so
big
it's an
transaction.
obfuscation basically. I've seen these
Exactly.
actually. That's what I meant when I said that there is some solutions. Is I've been reading about Stripe. They behind the scene they put them all together, so you can't really track
Exactly.
anymore.
I mean, we have also another layer built, as you know, the Camino Messenger, which is a
Yeah,
decentralized communication protocol, and that's encrypted, for instance. And there we can make the booking and the payment in the same transaction. And then what we put on the blockchain is also encrypted. So you just have a hash, right, pointing to an external system. So that's something which you can also do. So there, I would say there are a lot of tools. I mean, at the end, you need to make sure that the transaction can be validated by the network, and that whoever receives the money can, of course, then basically decipher what's going on here.
so I'm still trying to see, somebody listening from the travel industry, they may be wondering, okay, that sounds great. What can I, again, what are the advantages and what can I do? So let's go through again. There are cross-border payments which will cost you
Fraction.
0.5%, fraction of something. Okay. Settlement is in minutes or seconds and not in days.
Yeah.
The one thing we didn't mention, it's always on. It's not like Monday to Friday. Okay.
24/7, yes, and
24/7, which is
highly
easy.
available because it's a decentralized network, meaning even if part of the network goes down because they were in the AWS cloud in the US or something like that, rest of the
Still on.
network continues.
Then it's transparent, so the records are no reconciliation basically, and then there's the potential for earning yield, right?
And I would even add one, which I think is underexplored at the moment. It's the programmability of money. So when
Yeah.
do I pay out money, right? I mean, you can add much more business rules. You can add as well refunding contracts. I mean, I've been speaking now. WTM is a provider who already uses an internal blockchain by basically doing the agreement between two parties is a smart contract. In case of cancellation, refund, so it's all written in stone, literally, and it's executed based on certain triggers.
And if
So,
that wasn't enough, one more thing, if you know if an AI needs to move money, will it prefer a credit card or a stable coin?
I mean, that's another topic why we are also seeing now a lot of interest in things. I mean, the whole world is talking about the AI. And there was a recent article I read on LinkedIn, which I found quite good, which stated actually it's diverting attraction. A lot of companies and people don't realize that, yes, AI is a thing, which most probably now will enter a little bit following Gartner's hype cycle, most probably a little bit into the valley of tears, because a lot of people have been spending money, a lot of money, burning a lot of money, and also the use cases are not yet 100% there. AI will need money, exactly. So the question is, I mean, you can program an AI with a virtual credit card, that's no problem. But then we are again to the downside of credit cards and the traditional payments. Now, AI, to be fully effective, especially in our industry, and I think Google just launched this week a new booking protocol as well, because most of the stuff we saw in AI so far was more exploration. Give me answers, give me products, show me stuff, right? But then making the transactions usually happened outside of the AI. So we are convinced AI bot will need not only payments but also identity. But on the payments part, if the AI bot has a wallet which can be topped up or he has access to, he then really can rebook your flight when he sees, hey, you are still on the flight and your flight is delayed by 3 hours due to unweather or whatever. The moment you land and you have connection, AI will push you, hey, by the way, this is your airport hotel. Your next flight is next morning because you missed the flight and all this thing. So we will need that. Also for refunds. What happens if you suddenly receive money back? And one thing I find quite interesting where my AI may also need actually money is the amount of requests we are going to generate through AI requests will be insane. You may remember in the early days of travel, we always talked about look to book ratio, right? So how many requests, how many visitors I receive for one booking. I mean, it's already now increasing drastically because there are already scraping bots, companies building their inventory based on API from others, but that's always incurring a lot of infrastructure costs. So what happens in our chain of supply in travel, usually those costs are handled down the whole chain, right? Everybody pays for that because if I have more server costs because I need to provide more infrastructure, my margin goes down. So either I eat it and absorb it myself or I increase the prices, right? So, and if I increase the prices, I increase it across the board. The next one in that chain will also increase his prices because his infrastructure also got more expensive, and so on and so on. So I think, and I mean, this is nothing new. This is a concept which is already baked into the early days of hypertext protocol, HTTPS, where you for a request may need to pay in the future. So this kind of coin-operated bots, I always use there the picture of an old English phone cabin where you need to send in money before you can call somebody, right? And the more you consume, the more coins you need to put into the slot.
Right.
So I could very well imagine a touristic and also other infrastructure in future working like that. You want something from me, Luca, you're asking me a request, you have to pay for it. Maybe you're a good client. Maybe I actually give it to you for free because you have a good look to book ratio. But this kind of things, I think it also opens up new monetization possibilities and cost steering possibilities for companies.
They're monetizing the data basically instead of having to go through scraping, which is very inefficient. You give access to an API and it's paid kind of automatically.
Yeah, and I mean, if you have the right token in your wallet requesting it, you may get it for free because you're on a special tier or a gold partner or whatever. Others who are basically loading a lot your systems, they will get punished by having to pay something for that.
So we have like 7 different reasons why it could make sense for a company to jump on the crypto wagon in a way, even if that's not the way we're gonna phrase it, because they're gonna be scared with the word crypto. But somehow they're gonna use stablecoins, and we're only talking about the stablecoin use here, not many others. Why is there not a stampede trying to get in?
I think on the one side, you see a little bit of a stampede. I mean, if I
Oh,
open
really?
my LinkedIn feed at the moment, you see every week some partnerships being big payment providers now collaborating with chains, institution, banks launching some kind of token. Stable coins are popping up around the globe like mushrooms, I would say.
But this is in the travel industry or in general, you mean?
In general,
No,
in
I mean
general.
travel industry, because in general it's
Ah,
clear. It started that they are running. Everybody's running, but the travel
yeah.
industry
So
tends to be traveling
I think
slowly. So,
I mean, again, here it comes down in which kind of cycle we are in travel, right? The last 3 years, it was a lot of catch up. People were doing good. If business is good, people don't look at costs usually. It's just bring it in.
yeah.
Then also we have to see that the touristic infrastructure is built on legacy. Most of those systems do not have their own payment rails. They're always dependent on providers like Stripe, like Visa, MasterCard, and so on. So it is always integration work. But I think that will be now that these players who actually, which is funny, right? Because a lot of these players you wouldn't need in a pure Web3 world. They are doing the work actually wallet to wallet could do. But it's, I think, not the reality to think that every company will manage their own wallet and send money through a blockchain network. So these companies are positioning themselves because they know there's a threat that we can optimize costs, we can better serve our customers. Most probably, some of them will go down a little bit with the transaction costs, or maybe they will keep the same transaction cost they have today by offering some additional benefits like, yeah, if you use this payment rail, it costs you the same or maybe a little bit more, but the money is there in 4 seconds. So,
Yeah, because
so
somebody's going to capture the value, basically. And the question
of course,
is the travel industry, as usual, not going to capture the value, but because some other more highly technical players come in, or is somebody going to capture the value this time?
I hope so. I mean, we have a few travel payment companies who are specialized in that, moving into that direction. And but it also you can't forget that there is also a lot of legal frameworks which need to be in place, right? I mean, in Europe we have MiCA, Switzerland is quite well, but we have other parts of the world who are not allowed to deal with stablecoins yet because the legal regulation is not there. And travel is a global industry, so you need at least I would say 60-80% match with your destinations so that it really makes sense. Or if it's intra-company like MTS, then it's easier because it's all between the company. But there are a lot of regulations that applies: anti-money laundering, know your transaction, KYC, right? Who is the ultimate beneficial owner? So there is more and more of that coming, which on the one hand side is good, because it gives it credibility, stability, and also customer protection on the one hand side, and differentiates the good and the bad actor. On the other hand, of course, it also, yeah, not every country will jump on it as long as there is not a specific legal framework in that.
What I've seen is that, and again, I was studying the Stripe acquisition, lots of these problems will be solved from them. So that
Mhm.
people who use Stripe, companies who use Stripe today, they won't even know what's happening behind the scenes, and things are going to get better. That's a very simple answer. But what kind of company today, and not tomorrow, but today, could, let's say, oh, I heard the podcast or I read some stuff online. I've been at the Camino, at the Chain4Travel conference. I want to do something. Who would you advise to move now to get tangible advantages now or soon?
I mean, I would advise any company to move now because technology is moving very, very fast at the moment, and you need time to create the basic understanding and to upskill people, right? That's why we also have our Decode Travel a hackathon series exactly for this, where companies can send in people and try to build up the internal skill and knowledge about that. I
Okay.
mean, companies who are in a very international environment, so speaking outside Europe, sending money, large quantities of monies, intercontinental, for instance, and they want to cut down costs to a fraction, I would definitely advise. These are airlines, there are destination management, international companies. But as said, I mean, it can also be that you are a multinational company looking at optimizing your internal spend or in your internal workload, making it more transparent. So I would say whoever deals with foreign money and sends foreign money should have a look at that.
What will be the first step? What do they do? Do they read something? Do they contact somebody? What will be the first step, in your opinion?
So in our case, usually they reach out to us to get a better understanding. And that's why also our events are so important because we can then show these videos, companies being on stage, showing their KPIs they have achieved. And this drives a lot of interest, right? So usually we at Chain4Travel, we advise them, we give them a high level overview how this solution has been built. We point them to companies in our ecosystem who have this kind of solutions. I mean, we've been now talking about stablecoin payments, but Bakun, for instance, also offer payment via blockchain, but without the involvement of stablecoins. So what they do is actually they have local entities, bank accounts, and they have to move money, let's say, from Switzerland to Saudi Arabia, right? So what they do is they receive the money in Switzerland, they register the transaction on the blockchain. So it's just as an Excel sheet, as a digital ledger. And their local entity in Saudi Arabia makes the payout. And that's then a local bank to bank transfer at a fraction of the cost an international transfer would go. So it really depends a little bit on the needs, but I think the first step really is get in
Sorry
touch.
to interrupt you. This Bakun is basically doing a bit like Wise with the extra writing on the blockchain for extra transparency, or what
Yes,
is
and
it?
they also are a booking hub. So they also offer booking interfaces to hotels. So
Okay.
you can combine the booking and the payment
Booking
on the
engine, you mean?
booking engine. Yes, they have a B2B marketplace where sellers and buyers meet.
Okay.
And yeah, so that's another way of doing the payment, right?
Okay. So
And
reach out to
I, would-
somebody who knows, basically, and that would be you, basically. That
I
would be
think
you.
the first step should be educate yourself a bit, then talk with us. Think about what is your internal pain point. So is it credit card? Is it international transfers? Do you want to optimize costs? We help you, we discuss that with you, and then we point you to the right direction.
And MTS, what can they do for a company like this?
Well, MTS has developed an intra-company solution by themselves with their IT provider. I mean, I'm sure that they are open to discuss that, but it's a proprietary, so it's not a product which is a SaaS product for externally. It's more an internal use case. They may do that at some point, but that's to be discussed with them.
Okay. So, since some people are activated by opportunity, but most people are activated by fear,
Mhm.
what if they keep ignoring crypto because crypto is like a hellfire of scams and stuff, and I don't want to hear about crypto anymore? I've been hearing about this for a long time. Give me a break. Paying with Bitcoin. What is that? And this is another of those episodes about the future of crypto, etc. So I'm gonna ignore this as a travel company. What's gonna happen? What are the risks by ignoring
I
this
mean, the
today?
risk is always that you become obsolete over time, right? I mean, companies and it's actually every company is tasked with that for survival, be it for their own interest, but also the shareholder interest. They should look at innovation. Not every company is in the same position, manpower, budget wise to do stuff. But that's also an advantage of the technology we are using. I mean, it does not come with high costs. It may be something you have to start understanding, invest in internal manpower, a little bit of knowledge build up, skill build up, but actually then you can engage, and I think you have very tangible benefits in short term. Companies who are not doing that, well, we've seen a lot, they will have most probably their Kodak moments, right? They will be missing out. And as you say, I mean, for me, new technology is a true innovation when the mass market is using it. Normally, you have fast movers, first companies. They will position themselves quite strongly in the market, I would say. They will be able to benefit, maybe even through lower costs, they are more competitive, or they will have a higher yield if they keep the costs for themselves, right? Still offering the same price outside, but there will be a mix. So I think for long-term survival, it is very, very important that you follow closely what's happening, and then every company needs to decide for themselves: is it a threat or is it a friend? Is this something I should invest now? Because that's also unfortunately the truth. Every company has their own roadmap with their own priorities and own problems they need to fix. And it is challenging to find the right way to put something in where a lot of people will say, I still have time. I still can do this in 2, 3 years. Problem usually is if you wait too long, then the cheap offers are gone. The experts become more expensive, and then it will take more money to implement it.
All right.
And as everybody else has it, you're catching up then. You will not be able to have the full benefits.
So this is now the Goldilocks window. This is the time?
I would say so, yes. I mean, and I think all these institutions, Visa, MasterCard, BlackRock, everybody now engaging with stable coins. I try to avoid the word crypto, honestly, because it still triggers too much notions of scam and volatility. But we talk about new payment rails. At the end, it's new payment rails. It's a business opportunity to become faster, more secure, more transparent, more efficient at lower cost. And if this is not the selling argument, then I don't know how to convince those companies.
Could it be said that how payments work today is a bit like the phone worked in the past, and on copper basically
Yeah.
lines, and stablecoins are the internet and they are WhatsApp. So the infrastructure is like the internet, and the use case is going to be like WhatsApp. So WhatsApp. So before you could only call, you wouldn't see anybody, no voice message, no nothing, just call live. And with WhatsApp, you can do video, you can do message, you can do so many things.
Yeah.
Is this the kind of technology jump that we are seeing with stablecoins?
Yeah, I think, I mean, stablecoins will enable us, if we go back 20 years, right, where we were talking about Web 1, Web 2, now we are in the Web 3 area. Stablecoins definitely enable us to transfer value as we transfer information today. I can send you a stable coin. And I mean, there are a lot of payment rails. You mentioned Revolut, for instance, before that. They have built internal application matching that, but they have all the licenses and they have huge development teams. You can do that with much less effort and without being dependent. Right?
There is a hidden problem with stablecoins is that they're not always worth $1. They are worth 99 cents or $1.01. And in some legislation, in some countries, you have to calculate the profit you make on this or the loss, and that makes it very very complicated. So we still have to iron out, or not us, maybe regulation or something, iron out some of these small issues. But Revolut, for instance, 2 3 days ago, they decided to say, okay, one
$1 a
USDT is $1. That's it,
Exactly.
nothing else.
It's a beautiful marketing campaign. I mean,
Yeah.
most of this is not only the margin the stablecoin provides, it's also the gas fees, right? Somebody has to pay for the transaction. And I think that's why it was not 100% pegged to $1. Also, depending on where you off ramp, you have little fees as well. So that I advise every company have an end-to-end view. What does the process cost you? Which partner are you working so that you really get most out of that?
Are there stable coins or plans for stable coins on Camino? Or what kind of
Yes.
stable coin do you suggest on Camino?
So currently we have Euro SH, which is provided by Stanhope, which is a B2B stablecoin only working in the ecosystem.
Okay.
Monerium has is
Monerium is kind of running on Camino?
yes, they have deployed now on live Camino,
Is it live
and
now, Monerium?
yes,
Oh,
and
well, tell us a bit about Monero because I use it daily through the Nosy Safe, the Nosy Pay card, and it's
yeah,
fantastic. It's a euro stablecoin, so it's worth a euro, not a dollar. Tell us a bit more, and it's MiCA compliant.
it is MiCA compliant. It works very traditional, so travel companies can to an IBAN, so they open an account at Monerium, go through KYB, everything, and once that is done, they can transfer money to that account.
So
Monerium then
let's
takes.
be clear. And I do this from Revolut. I can send $1,000, €1,000 from my Revolut account to my blockchain address, and it becomes 1,000 Monerium, which then I can spend with my card as euros again. So it's behind the scene.
Yes,
But I'm sending
the
crypto to IBAN, IBAN to crypto. Oh, no, the other way. I'm not sure you can do that.
Well,
Sorry,
what the
sorry.
use case we are
Yeah,
focused more is more IBAN to IBAN.
IBAN.
So you
Okay.
have an IBAN address at Monerium. Travel companies send to their IBAN address at Monerium money.
Yeah,
Monerium
that's what I
tokenizes
do.
that
Yeah.
money. It creates a stable coin, the Euro E, which is the Monerium stable coin. And that stable coin then transacts on the network,
Okay.
right?
So, yeah, go ahead. Sorry.
And then basically that's the on-ramping part, transaction on the network, okay. And then on the off-ramping part, the partner also needs a Monerium IBAN. Then that money, when he withdraws the money or off-ramps the money, then it goes to his IBAN and from there to whatever bank account he
So
has.
again, the token is behind the scenes, and as you
Exactly.
see,
This is honestly the way to adoption, in our opinion, because you don't have frictions. Travel companies don't need to care if they don't want to about, hey, what is my Gnosis safe? Where are my keys? Where do we store that? What happens if somebody leaves the finance department? And so on and so on and so on.
are you familiar with the Nosys Pay credit card or debit card?
I've heard about that, never used it
Okay,
myself.
it proved to me some what you just said, friction. So I have stable coins. I could put them on Aave or other lending protocols. I don't do it because I have to take out my hardware wallet, do it, remember it's there. There's a bit of friction, a little bit of friction, but it's there. So
Yeah.
I don't even use these platforms, and my money is sitting there losing value. Nosys Pay, using Monerium, gives me an interface where I send €1,000 from Revolut to the card. I see €1,000 coming in after a minute. I
Yeah.
take 900 of them and I put them on Aave through the app. I just
Yeah.
click a button and I see the money growing. And then I
Yeah.
have €100 in my debit card. When it's over, I move more. Everything through the app, and everything is happening on the blockchain because that money is not in Nosys Pay account. It's in my safe, which is, for those who don't know, is a an address which is managed by more than one person, in this case by me and the card. So it's a bit complicated there, but it doesn't matter. What I'm actually using crypto as it should be used, because they removed all the friction, and it's extremely powerful because I'm doing it every day. And that's what could happen in travel. Another use case is like, the Stripe allows you to be paid in stable coins too, right?
Yes.
So if you get Stripe payments, you can say, okay, pay me in stable coins, and I could get these stable coins and put them on to get some yield very easily. That's another use case for maybe smaller players, maybe vacation rentals who don't manage millions.
Definitely. I think the bigger the companies, the more compliance topics you will find with that kind of yield, right? Because especially, if you talk crypto, still a lot of banks, the compliance department is like, okay, that's a red flag. We cannot use that. So you definitely have to check what kind of compliance framework you're in and how big the company is, but it's an opportunity.
My bookkeeper tells me for the company, if I start accepting crypto, is fine, but they're gonna double my fee because there's no software for it. So that's another problem.
We heard the same from our bank, where they just got acquired by another bank and said, hey, now the compliance department said monitoring effort and know your transaction, proof it, the fronts, and so is so much higher, we double the fee. Exactly.
But that's because they're not ready, because everything is on the blockchain. It should be much easier. So it's gonna be much easier as soon as software catches up, bookkeeping software and compliance software and everything else. So yeah, we are not there yet. Like, not everything is as easy as it will be, but as they say with technology, today is the worst it's gonna ever be. It's gonna just be better, right?
Yeah.
Okay.
I would say so. As it matures, more institutional players, more usability-friendly solutions come, more seamless it will be to interact. And most probably in 10 years' time, we will look back and think, did we really wait 2 days to get money through the bank?
Did we really pay €2 per minute to call to Austria from Italy? Yes, we did.
Exactly. Yeah.
It's impossible. It's incredible, right? And we're going to do the same. Last question, Pablo, and then I'll let you go. Thank you. Where are we on the curve? The exponential curve. Where are we? The one which is going to make explode.
We are right at the point where we have a good basis now, and it's starting to accelerate. So, for instance, we believe, looking at how our network is growing, partner-wise, smart contract-wise, application-wise, and also transaction-wise, that we are not yet exponential, but we are now in the duplication phase. Okay. So we will see double. And at some point, the network effect will kick in. So you will have travel companies being on one side, because that's still something we hear very often. Hey, this is super interesting, but bring me a partner that wants it as well. So basically, you need not only to bring the technology, but also do a lot of business development and convince two partners to work together. And that's a true power of blockchain, I would say, if you not only use it for internal use cases, but definitely in the broader network with different partners, right? Because at the end, it's the same technology as an infrastructure.
So are you ready for the ride?
Definitely looking forward to the next year. So, I mean, we called our baby Camino for a reason. We knew that it would not be a sprint. It's more a marathon. So it will be a long Camino, but I think we have a nice journey ahead of us.
Cool. Thank you very much for your time, Pablo. I hope we can talk again soon from that part of the curve where we're flying.
Perfect. It was a pleasure as always.
Thank you. And we're done. Thank you for listening to this episode. For more insights, follow me on Twitter at Tripluca, TRIPLUCA. If you enjoy my podcast and want to support it, head on to podcast.web3intravel.com, 3 is a digit, and mint an NFT. If you want to sponsor it, you can do it at the same page. I will mention you in the podcast, and your name will appear on all donation NFTs for a while. Thank you, and ciao.